Welcome to Investment and Partnerships in the Cannabis Industry, and thank you for making time to listen to our panel. What we'll do today is we have an exceptional, and I do mean exceptional, I've known some of these individuals since I've been in the industry, since 2014, and they may have been actually in it longer. We have an exceptional panel that intends to help you understand the good, the bad, and the ugly of investments and partnerships in the cannabis industry. Not necessarily particular to California or the U.S., but in general. In order to help the panel, why don't I get real quick a feel for the room? How many of you are current active investors? Please raise your hand. Awesome. How many of you are looking to invest? So most of you are already active, interesting. And how many of you are trying to assess whether to partner or not in order to navigate this industry? So a lot of interesting partnership, gentlemen. I'm Giada Aguayo-DeCarcer. I'm the CEO and founder of New Frontier Data. I will be your moderator today, which means you won't hear much from me, rather you will hear from our panels. So why don't I start by letting each of them introduce themselves, tell you who they are, what they do, and why you should be listening to them. But more importantly, what kind of questions you can have for them. Our intent is to speak for 5 minutes each or so, and then open it up for you to have your particular questions answered and make it therefore valuable to the audience. Thank you. Alain?
Hi, my name is Alain Banquier. I'm currently the interim CEO of a biopharma company called Nexian Biopharma. I've been an investor in this space for the last 5 years, so I've invested in a wide variety of the ecosystem, including in New Frontier. As I've gotten more and more focused, I'm now focused on data, on technology, and on the cannabinoids, the actual cannabinoids rather than the plant, which I think is going to be the future of our industry. And that's very relevant on an international basis because everybody has an endocannabinoid system, whatever country you're in, whatever ethnicity you are, whatever color, race, whatever. And so it will be the true international equalizer. And as a result, I've been focusing on investing in companies like EBU, which I invested in a long time ago, and other technology companies, and I'm very happy to be here.
Hi, I'm not. How am I doing? All right, thank you. My name is Tim Seymour. I'm CIO of Seymour Asset Management. I come to the cannabis world as a global investor by background. I've spent most of my career investing in new asset classes, but that really means emerging markets. I was partners in a Russian bank. I ran a long-short EM hedge fund for about 13 years. So my orientation to the asset class is both as an investor, but someone that has seen these types of developments, I think, play out in other parts of the world or in other asset classes. I sit on the board of a handful of cannabis companies, including TGOD, Organic Dutchman, Cannabis Club TV, Tikkun Olam USA. I've been investing for my clients in the sector for a long time. And clearly, the topic today, I think, is ultimately about how investment in this sector, in this industry, is changing. And as we all know, the public and the private markets are very different, and hopefully we'll get into that.
Hi, I'm Deborah Borchardt, and I'm the CEO and co-founder of Green Market Report, which is a cannabis financial news website, www.greenmarketreport.com. I'm also a board member of AccessWire, which is a cannabis newswire, and I co-founded the Industry Power Women, which is a women's networking group for cannabis financial executives that are women. My background is also Wall Street. I worked at Bear Stearns for 15 years. I was a vice president there, and I had the Series 763 and Registered Investment Advisor licenses. So one of the things that I learned throughout my career on Wall Street and in journalism is to quickly assess companies and make fast judgments on them. So I'm basically a professional skeptic, and that's one of the things that I bring to this panel is I've had to look at these company announcements when you see all these mergers and acquisitions and all this news, and they all tend to use certain code words. And so what I do with that is I kind of break down those code words that they use and start to determine really quickly what that announcement is really saying. And so hopefully we'll kind of get into that, and then you guys can kind of start to learn to look for those, I don't want to say red flags, but kind of code words when you read these announcements.
My name is Michael Berger. I'm the president of Technical 420 and Stonebridge Partners. I got in the cannabis sector back in 2014 when I left Raymond James Financial. I was an equity analyst over there when I realized there was a huge need for investment information. I came into this industry really focused on the United States, but we all saw a lot of what happened in 2014 with these companies. So I pivoted over to the Canadian sector in late 2015, which proved to be a nice transition because you had Aurora and Cannabis and all those very small valuations when compared to today. Now I'm really focused on new trends through our business, cannabis oil, smokeless products, what's happening with the CBD and hemp opportunity as well as international side. So I've been helping investors since 2014 make educated decisions, also try to help them understand the risks and opportunities in this space in a method that's kind of easy to understand and easy to gather.
Actually, I'll stand up. As I mentioned, I'm Jada DeCarcer, CEO and founder of New Frontier Data. We're a now global company that started in 2014, and we focus in objective, neutral, comprehensive, in data ingestion, data analysis, and data reporting for all things cannabis. So think information turned into actionable intelligence. Since 2014, I've been discussing the absolute need for alliances and partnerships to navigate this space. And maybe we can talk more about this in a minute. We refer to currently being in what we refer to as investment 3.0 of the cannabis industry. 2014, you had $25,000 to $50,000 checks being written by individuals, high net worth individuals, or individuals that just wanted to take a crack at this higher risk emerging market. Move on to 2016, really early 2016, you began to see a shift with venture capital firms focused in the industry, not necessarily from outside of the industry, but really within the industry, the emergence of dedicated funds that brought, think of them as investment clubs, and checks went up to $250,000. Today, we're in cannabis investment 3.0, where you're now beginning to see mature, traditional VCs and investors with the sophistication that you see in the panel. The bar has been raised, and so this discussion is very, very important. When it pertains to alliances, I'm sure you've all noticed that the stakes are higher. We're now seeing serious entry from mature enterprises outside of the industry that has made it extremely important, if not critical, for all of us in the industry to begin to think of how do we navigate the wave rather than drown in it. And that's where alliances and partnerships will be key. Very proud to say that New Frontier Data would not be here today without dozens of alliances. We're a data aggregator. Without partnering from within and outside the industry, we would not be able to provide you the information we provide today. Enough about me. So why don't we start with, first of all, let's see this early on if we already have some particular questions for some of our panelists. Do we have any questions? Really? Wow, we've already done such a great job, no questions. Well, then I'll pose a question for you. Mr. Bankier, why did you decide to go into this industry when you did, from both an investment perspective as well as now an actual active operator? And how do you see that environment changed from the past few years when you entered to today?
You want me to talk to the whole panel? Or?
I'm starting with you, but if the panelists like the question, you can answer it.
I came into this industry in late 2013 because I saw it as a nascent industry. I just sold my last company, which was a largest kosher food manufacturer in the United States, a company called Manischewitz. And I had always been pretty comfortable with the plant, and I looked at the industry, and I'm in New York. I came to California, I came to Colorado, and what was going on blew me away already in 2013. And I said, this is going to be a very interesting asset class to invest in. And initially, I thought it was just going to be an asset class, and then it took over my life. So right now, it's pretty much the only thing I invest in and that I work in full time. But on the international side, that's even a much more interesting story, because we live in the United States, and as Americans, we tend to be very American central, right? America is the center of everything. Well, to people that don't live in America, it's not. And I'm French. I was born in France, and I worked at BNP Paribas, which is a big French bank, and I did a lot of international business. And cannabis is an international industry. It's international. It's an international black market industry already all over the world. And just like in the United States, we're converting the black market to legitimate markets. And each country, just like in the United States, each state has its own ways of going about that. And that is part of the super interesting challenge of investing, not only state by state, but also country by country. And so I could talk about this all day, but I'll let my fellow people talk too.
Tim, do you want to speak a little bit about the challenges? I mean, you can piggyback off Alain's question, but if you can also focus on how have the challenges changed?
Okay, so, and again, dropping it into a context that I think is my lane, so to speak, to be swimming in as you know, primarily a public markets investor and running kind of traditional investment products. But you know, Alan talked about the international dynamic here, and so challenges come from what has ultimately been a great opportunity, right? So the reason I got into emerging markets is also one of the reasons why the cannabis industry makes a lot of sense to me. I used to always tell people that, you know, emerging markets was kind of investment, it's macro investing 101 for dummies. And with all due respect to myself and all the other folks that were investing here, in you know, 1998 or 1995 or even 2001 or 2, it was really about who's going to get the next IMF tranche. It was really about which, you know, market-oriented government was going to take over in Latin America. It was really about who had oil in the ground. It was really about these legislative or macroeconomic dynamics that were driving investment into these places. That's exactly where we are in the cannabis world. And obviously, to oversimplify it, it's been a legislative dynamic, which is also coming on top of really what is turning into, I think, a social wave that you could make the argument, everyone liked to invest in emerging markets, you know, the BRICS, and people used to get really excited about investing in consumption trends. And this is really about new consumption trends. And for many people, it's going to be substitution of old trends for new ones or tastes. But that, to me, is the fascination. The challenge right now comes from that we're at a place where, arguably, for you know, a lot of folks that have been investing in the public markets, and good for you if you've been investing for the last 3 or 4 years, because you've made a lot of money. But the hard thing right now is you've got a glut of IPOs coming to market. You've got a number of companies right now that are set up just to be capital markets machines, and they're not necessarily executing on anything. In fact, some of the biggest mistakes that have been made in corporate history is when companies raise a lot of money without a plan, and ultimately then go out and have to execute on something that really is not a cohesive strategy. And I you know, I often talk about you know, Japan in the late 80s, which to me is a perfect example of where we had an asset bubble. No one really knew how to price assets, really. Capital was free. And effectively, you saw some of the worst investment decisions being made for those companies in that economy. And Japan is still getting over, I think, a deleveraging process from the 80s. I don't know that that's going to be what takes place in cannabis, but what I'm most concerned about right now is that you've got a market opportunity that is extraordinary. And no one here in this room is going to tell you that, I don't believe anyone in this room would hold out that in 5 years from now, we are not all significantly deeper into this trade, and I mean both as traders and investors, but also as consumers and people walking the planet. The question, though, is who obviously is going to make the next move, and whether the Marlboro Man now coming in to validate the big Canadian LP model is the right thing or not. There's a lot of companies that are just not going to survive right now, and there's a lot of people that are lured in to the promise of 2021, 22 growth numbers that they'll never get to. So I'll stop here, but that to me is, we're at a really interesting crossroads, but it's a scary time for investors.
Excellent segue to Deborah. Deborah's been following the industry from an information perspective. So Deborah, maybe you can tell us a little bit of how misinformation is playing a role in the industry as far as challenges today, and then obviously any other insights you may want to share.
So there is a lot of, I don't know if I'd call it misinformation, but a lot of spin. And so you will see that in a lot of the announcements on the acquisitions or the mergers, in which companies will say, we are now the largest cannabis producer in the U.S., or we are the ones with the largest footprint. And so whenever you see that adjective, largest, that's right off the bat, you have to go, I wonder if they are the largest. And how did they come up with that definition? Because sometimes when you push back and say, well, how come you say you're the largest? And it turns out that well, we're the largest with the number of places that have 5 employees in these 4 states, and it becomes this thing. I also think that with this rush, as Tim was alluding to build out and to expand, everyone's, now we're having this race to be the biggest multi-state player. And so you have to kind of look at their ownership of some of these states that they're now in. So they'll say, well, our footprint covers X amount of number of states. Well, they may have only bought a 5% interest in one of those producers in that state, but they're going to say, oh, well, we're in that state, but it may be like this big. And I think that's something that you also have to learn to evaluate too. I think that, to me, a lot of people compare the cannabis industry to the dot-com boom. And I think that a better analogy, and I can see some people in here probably date back to the telecom expansion, and I think that's a really good analogy, because you had that same kind of expansion within that industry, and if you lived through that time, and a lot of those companies didn't survive, during that time, the argument was, it's a tower story. Whoever owns the cell towers, they're going to be the winners. And then the next week it was, no, it's the wires in the ground, that's who's going to win. And then the next one was, no, it's how much footprint you've got over. And then at the end of the day, now we're only left with a handful of cell phone companies. But back then, boy, there were probably, well, you were at Raymond James, but there were probably at Bear Stearns at that time, I think we had like 3 telecom analysts, because there were so many telecom companies. And now we're down to a handful. So I think that that's kind of, to me, is where we're at right now. We've got this race to be the biggest multi-state in the U.S. In Canada, you've got the race to be international, which Alan, alluded to. And I think that right now it's going to be pretty interesting to see who is going to win. It's going to play out over the next 2 or 3 years, I would believe. And there will be obviously lots of opportunities to make money as some of these players move up the investment charts on the stock market.
Again, excellent segue. Talking now about consolidation and how the environment in both investment and operations in the industry is shifting, primarily because it's no longer just North America. Well, everyone is alluding to a true global marketplace when all things cannabis. So, Michael, can you speak a little bit of what's happening in the public market? We've all seen the news about Tilray. We know what's happening in the Canadian public market with the valuations. So piggybacking on Deborah's latest comment, could you elaborate a bit?
Definitely. And I think the point on hitting who's the biggest and how many people say that is, it's quite amazing, because you have all these guys saying they're the biggest. Like, we work with a lot of these companies, and when we publish a PR, we'll have a client reach out and say, hey, no, we're working with the biggest player. This isn't it. You should call them out. I'm like, let's hold back a little bit. So that trend is quite funny to see. Finding strategic partners is very important in this space, and that's what I think is going to play a major role in the future success of this industry. The multi-state operators has become a really hot topic, and looking at the market standpoint, I love Florida. I love what we're seeing there with the growth in that market. California is going to be the biggest market in the world. New York is coming along. I think you got to focus a lot on who these guys are targeting, and specifically ownership percentages, because that's a major kind of disconnect that the company puts out and what they actually have. And unless you're going to go into all the filings on the SEC website, you really got to look for somebody to tell you what's actually happening, what's really owned by the company, and what can be the actual real potential revenue growth. Previously revenue was a huge aspect of this industry. Now funded capacity, especially in Canada, is a huge metric people are trading on. And it's an interesting metric to go with, because you want to see what these guys can actually produce, not what the potential they can produce with the money they have is. I mean, you want to see how they execute on the first 50,000 square feet before you get to 1,000,000 square feet. It's not easy just to scale. So you want to look at these management teams and seeing if they have the ability to operate effectively, get their margins down, and the cost of all this stuff is astronomical. I mean, power costs, huge. U.S., I mean, you have 280E that hampers what you can actually do as a business. So Canada is a great place to be, but I think the United States is an early stage opportunity. We're just really getting started. If you look at the differences in valuations in Canada versus the United States at a Trulieve, at a Liberty Health, Medicine Man Technologies, I mean, they're fractions of the market caps up in Canada. So looking at that, you look at the growth potential, the management team, I don't know if I actually answered the question, but.
So if I may bring back what you've been hearing. So there is consolidation, there is opportunity. We're seeing some, not to put words in your mouth, some potentially inflated valuations in the public market in Canada.
They're definitely inflated.
Thank you.
You're not putting words
Thank
in
you.
anybody's mouth.
So I used to be with JP Morgan, so I think we have a bunch of bankers. Yes, really inflated. I don't even remember seeing that in the .com, like serious. But you know what? There's a rhyme and reason on why this is happening, and this is exactly what Michael was talking about. There is consolidation because there is more competition. What's happening, and scalability is key. Cost is key. By the way, can I do a plug? We just put out a free report on energy if you want to know how burgeoning energy costs can be, especially in California, okay? Because that's going to be a factor moving forward, especially with these publicly traded companies that touch the plant. But what you're beginning to see is in order to compete, you're going to need scalability. And you need to scale into multi-markets because we have over 60 countries around the world that are either decriminalizing or legalizing. The competitive environment has expanded to, I mean, it's gone viral. It's crazy. So in order to continue to be competitive, you're going to need to scale. And in order to scale, you're going to need either money or scalability through alliances and partnerships to bring it right back to the topic. So yes, the public market now is providing opportunities in Canada to have sort of what people refer to as that war chest. So you can then what? Acquire scalability and acquire a foothold in order to expand into these new markets. Because I can assure you that no one can do it single-handedly and organically at this point. All companies are too young. I don't care what people say. We're all too young. So I see a question. Perfect leeway, so I shut up.
Next week, Cannabis Investing News. A lot of the buzz in the sector has been driven by this Canada's move towards legalization, which is just under a week away now. What do you think is going to happen to the share price of these public companies in Canada after legalization takes place?
Jump in.
I'll start. I think it's a good question, for kind of classic investment theory, right? It's kind of you buy the rumor, you sell the fact. I don't think there's any surprise in terms of who's got what contracts with the provinces, what their capacity is. There's a lot of surprise, as Michael's talking about, who's really going to be able to execute. I think there's going to be enormous challenges in terms of both distribution, supply, et cetera. But ultimately, I think it comes down to what's really been driving prices for the underlying. Again, I think we're talking about public equities right now. I'm not so sure that this run that we've had, in fact, I'm very sure that the run we've had in the last 8 weeks in the publicly traded market is all about strategics. I think it's a lot less about Canada. I think Canada was in the price as of fourth quarter 2017. I think this is all about Constellation. This is all about Coca-Cola. This is all about Molson. This is all about Diageo. This is all about the reality that we're seeing the verticals start to shake out. And I think that's the more important dynamic right now in terms of what's going on pricing. Canada, again, God bless our Canadian brothers for taking the global leadership on this. It's a major day. It's an exciting day. But if anything, I think you see weakness on that.
I'm going to disagree a little bit because I think that you're going to see the reactions of legalization October 17th probably in the next quarter because we're really going to start seeing the separation between those that are really executing and those that aren't. And right now, initially, there's going to be much more demand where everybody all of a sudden wants to go and try out this new product, even if they did when they were in college or if they never did or if they're using it all the time. And there's going to be a lot of problems because a lot of these LPs are public companies that have had valuations popped up and they're really little basic startups. They haven't even executed on what they're doing. They haven't, some of these companies have contracts with the retailers that are multiples of the quantity that they've ever produced. So I think we're going to start seeing over the next couple of quarters a big shakeout between those that are basically the whole business is that they're a public company and that's the whole reason that they exist, versus some of the others that are real underlying businesses that are going to produce real underlying cash flow. So I think it's going to be pretty interesting, but unlike the sort of traditional Wall Street adage of, you know, you buy the rumor and you sell the news, you know, this is not a surprise. This has been, you know, going on for a while, and so I think it's going to take.
Going up into that event.
Oh, I don't think they're going to jump at the event, but I don't think they're going to sell off. I think it's going to be kind of a, you know, oh, okay, it happened. Why didn't they go up? Why didn't they go down? And then the going up and down is going to happen, you know, as companies really start either performing or not.
I think you also have to keep in mind that the Horizons ETF is crossed over $1 billion in assets under management, and at a certain point, it just becomes, you know, the plumbing. All that money flowing into that Horizons ETF has to be put to work, and so they're forced to go out in the market and buy up all these shares of all these companies, and it just keeps this flow of money pushing these prices higher and higher, because they have to put it to work. They can't just sit, they can't be like a mutual fund where they can go 10% cash. So that's kind of artificially inflated a lot of this. But I think that these gentlemen are right. The next year is going to be really hard to do a typical analysis, because you can't do a quarter versus quarter analysis and comparison, because we won't even have edibles and vapes in Canada for sale, you know, at the beginning of the year. And all of these companies are all going to say that they had record sales, because it's going to be, again, an apples to oranges comparison. So I think that maybe the expectations are going to be extremely high for sales in the beginning, and we'll probably see that spike at the beginning, but then start to kind of taper off. I have to say, though, I mean, October 17th, you're going into Halloween, you're going into Thanksgiving, and you're going into Christmas, which I'm sure a lot of you guys realize, it starts to become a retail story, and all these sales spike at the holidays. They're huge sales, almost more so than 420. So their timing is super good for having some spikes in retail sales. So I would think that we'll start to see some good numbers. I guess that becomes a question of who can put up the best numbers, and maybe that's where we'll start to see some reaction in the stocks is, oh, if we see this company's put up $1 million in sales, but that one over there only did $500,000, then maybe that will affect.
Just one
Michael?
thing to add on is everybody on this panel has a Wall Street background. And on Wall Street, people are always looking at what are the metrics, right? And there's metrics that come in and out of vogue. And as Deborah said, she thinks sales is going to be the metric, but it's going to be a little while until those metrics actually, you know, people figure out, like, what is the metrics? Is it sales? Is it grow? Is it EBITDA? Is it repeat customers? I mean, what is the metric that's really driving that valuation? And all that stuff's going to take a little while to shake out.
And Michael?
I think we're going to see a big demand for products, but the limited quantity and the limited type of products is going to make an impact, like Deborah was saying. Not having edibles, not having oils available, you'll have the black market grow and increase. It's going to continue to take share away from these producers. But I think we're going to see a pullback. If you look back for the past 2 years and you see the trend in the March to, let's say, July, August, it's downwards, and it's a rough time period for investors. The last 2 years have been pretty rough, and we've advised our people that follow our newsletter to kind of put cash on the sidelines, get ready for some dips. I think you're going to see a different type of movement now. We're going to have leaders prevail, and you're going to have a lot of these guys that don't have any contracts, don't have any supply, don't have the ability to sell because their production won't come online until 2020, late 2019. These guys are going to falter. So I really think being focused on the guys that could actually have strong numbers, capitalize on this is where you want to be.
I just want to add really quickly. I mean, to me, though, the presumption that companies are trading on multiples that are relative to their production or whatever you want to me is kind of absurd right now. I mean, these are companies that are trading on a function of a land grab, of strategic alliances. Let's be also clear. I mean, yesterday the stock market was down 3.5%. People woke up and said, "Oh wow, liquidity is not going to fall from the sky forever." To me, I think the panel is rightly talking about this from multiple perspectives. We tend to focus in the public markets on the handful of names that aren't necessarily representative of the reason why you guys are all here. I think we're getting into production and talking about these LPs that are these big integrated models. What's really probably the more interesting part of this is the companies that are in the periphery and the ancillary and the picks and the shovels and the technology. And as a guy that's parachuted in from the East Coast, you kind of have this East Coast, West Coast. Remember the East Coast, West Coast rappers feud? You kind of have this East Coast, West Coast thing going on in the cannabis industry where this is the most sophisticated cannabis market in the world. And with all due respect to Canada, it was a more sophisticated market here before Canada thought, hey, we can take our expertise in metals and mining and resources and use the same model. By the way, we're really good at it. And legislatively, we're going to be ahead of the United States. So, I mean, I think I'm getting us into a different area. But I just think that how companies are trading right now is very important. But I'm not sure anybody could be trading on, oh, wow, they did very well in the first 2 weeks of legalization in Canada.
Just one thing I just want to add. Again, since everybody on this panel is from Wall Street, they know this by heart. There's a big difference between the valuation of a company, a public company, and whether it's going to go up or down in the market. So I think pretty much unanimously, everybody here is saying that these companies are overvalued. But I think you'd get a much different question of, are the stocks going to keep going up or down and for how long? But overvalued without a doubt.
We had a question of a gentleman. Yes, go ahead.
I'm glad that this last topic kind of went back pre-public market. So my question would be, from an investment standpoint, as a new investor in the space, what are the check boxes for due diligence as well as the red flags for due diligence when looking at cannabis?
Excellent question in case not everyone heard. What are the check boxes and challenges for a new investor when assessing an investment opportunity?
I mean, from a basic standpoint, you want to look at the financial structure. I know MedMen got a lot of heat over how they were compensating the management, the founders, and the voting class. I think that's really not a bad example if you look at some of what's going on in the CSE with having cheap paper at a couple cents, 5 cents. Looking how that's controlled, looking at previous funding rounds, you'll see how a company is able to get out of that private stage. So I think being able to locate how this company is formed and really what the potential financial structure and the pitfalls there with debt can be is it's something to look at.
Yeah, I would agree with Ryan on that. As far as, I mean, to me, I look at things like share dilution. I get concerned when I see, and not to pick on MedMen, but they did have an announcement today, and it was an all-stock deal valued at $600 million. So, okay, well, how many shares did they issue to do that deal? And that is not in the press release, and nor are they making that information public as of today. Now, look, they're going to have to do a filing. They're a public company, and at some point, we're going to get that number of how many shares they had to issue. They just did 2 other deals last week, and also said in that they were issuing more shares. So I think, to me, that starts to become something you look at is when they're making these acquisitions, how much cash and how much is stock. And if you continue to see a lot of stock deals, you have to start to wonder about that. I think that, Ryan also said, you have to do a certain amount of vetting and looking at how they're making these strategic moves. And Tim brought up something really important just earlier at the top about, are these strategic moves, do they all make sense? Or are they or do you getting that gut feeling that it's kind of like they're flailing, like they're like grasping at acquisitions? Like, okay, I've been buying dispensaries, and whoops, all of a sudden I bought an edible company. Like, okay, well, where did that come from? And then, and now this week I'm buying a software company. And so you have to wonder, again, and I'm not trying to pick on companies, I'm really just using them as an example, like a Mass Roots. 1 minute it's the Facebook of cannabis, and then the next minute they're doing seed to sale, but oh no, now they're doing Bitcoin. Like, what the hell? Like, pick something.
Oh, it's going to go up then if they're doing Bitcoin.
Not a good example. Let's move away from that.
I think that's something you have to look for, is when a company all of a sudden is making these, like, I bought this, I bought that, and I bought this, and I bought that. And it's not necessarily a roll-up. You have to start to go, ugh. Listen, I always go with your gut. If it's starting to, something doesn't look right to you, it might not look right.
So, right, Deborah's brought up some great points, and I would extend that. So she's talking about companies that suddenly have a pivot of some kind in their business model. And so in the last couple of weeks, people have been bidding up Pikes as, they suddenly, this has been a challenging story on some level on the tobacco side, and then, suddenly the business model changes. What's the good side of maybe what MedMen did, or at least understanding the dynamics of using your stock as a currency, is that arguably they have an overpriced currency, with all due respect, and they can now go do cash. They can go do accretive deals. They can go buy cheaper U.S. companies that with an overpriced stock. I mean, isn't that good news for investors on some level? So I think that's something to pay attention to. I think ultimately you have to understand the balance sheet of the companies. These companies, especially the big ones we know, and we don't need to name names. And by the way, the guys that have huge valuations probably deserve a major amount of praise for what they put together. But that these are guys that in many cases need balance sheets, and they need cash. And if they're going to be priced at a growth multiple, they need to grow, and they have no cash. So you need to look at who's going to be doing the next dilutive offering, who's got a convert that's coming due that they're going to have to roll. And then I go back to the same exercise that I applied for years in emerging markets. You better understand the corporate governance of the company that you're investing in, because it's all about that. At the end of the day, you can have, I would rather invest in an A-plus management team with a B model and a B business than a A-plus idea with a management team that's just a bunch of Wall Street guys. And there's a lot of just Wall Street guys and girls that are doing this. And I'm not saying that they're bad people. I'm saying people who have experience and have done this in other industries come right to this industry and say, I can do this here, but they may not know what they're doing.
So just to touch on something that Deborah said, in public companies, you have the companies that either issue a lot of stock for more capital or for acquisitions, and people don't seem very obsessed with the dilution. Why? Because, I own the stock at $10. They raised a bunch of money, and now the stock's $10.50 or $1, and, so I'm still where I was before. Very different from private companies. When private companies raise money, they all obsess about dilution because, there's no market yet that's actually benching, your valuation. And obviously, if you do something stupid and you get dilution, you're going to pay for it. So it's very different for your question about what's important for a public company versus a private company, because at the end of the day, we're talking a lot about public companies. But what's under a public company is an ex-private company. And you better hope that private company, ex-private company, is going to do what a company's supposed to do, which is generate ultimately more cash flow than they're spending. And then you get into the same basic analysis of any company. Forget cannabis. Management, execution, ability to finance that execution, all basic investment stuff.
We have time for one more question. Yes, you had.
Thank you. My name is Becca Dubois. My company is CanAccount Pro. I provide tax and accounting services for cannabis companies. And I'd like for a moment for you to look into the future when it's no longer a number one, it's been brought down so that companies like CVS and Phillips, who's already getting in shape to start growing and marketing marijuana, how is that going to
To repeat the question so everyone knows, with the expectation that large brands, the large enterprises such as the CVS's of the world and the Philip Morris's of the world, the large brands, the Coca-Colas, are coming in, what does that future look like for us? Did I capture that?
I think that's a good thing for investors, and you saw that with Constellation Brands, what it did to the entire sector back when it was first announced, and then the larger $4 billion investment was announced. When Coca-Cola expressed interest, you saw the whole sector move higher. I mean, once you get these mainstream household names moving into the sector, it really emphasizes what we have known is happening here for a while. And I think it's a profitable opportunity for investors because you get the buyout opportunity. Depending on what's happening there, I think it works out pretty well.
Yeah, I would agree. I mean, we've seen this play out in other industries. We've seen all the craft beer get snapped up by bigger beer companies. Same with the beverages. We've seen, vitamin water and all those types of, Sobe water. All these crazy water companies all get snapped up by the bigger players. And ultimately, it does help the people that are investing now in the early stage as they, 3 years, 5 years from now, all these major players just come in and start buying up and either closing those companies so they don't have the competition or just buying them and taking them into the fold. And, we've seen this play out in so many other industries over all the decades. I don't think that cannabis will be much different, 3 and 5 years out.
Right. So, clearly, the Marlboro Man may be smoking a doobie soon, and Walmart Canada is selling cannabis right now, or they are about to be. So we know the world is about to change, and ultimately, it was interesting to me to see how Constellation stock actually didn't respond at all to the stratospheric movement of Constellation Brands, which at one point, first of all, Constellation said on that deal, we think this is going to be, at a valuation that everybody said the day before on Canopy was absurd, was going to be accretive to earnings by 2021. And so then suddenly Canopy goes and even after the deal's announced, moves up another 40%, and Constellation stock didn't move. So ultimately imputing the value upon the multinational, the strategic, it's hard to really know. Again, the playbook that I saw happen in, say, the beer sector globally, when Carlsberg went into Eastern Europe and bought up Baltica and all the big beer companies, or when InBev went into Latin America and Ambev was born, and essentially the Brazilians, Budweiser became basically, by the way, the next Bud you drink, that's a Brazilian beer. And so, what's going to happen to the multinationals, I think, we really don't know what that means for their valuations right now. I think that's been proven. But for investors, I think, you do want to look at the companies that are positioning themselves to be part of what's a rapidly changing consumption dynamic. And on some level, it is, it's no surprise that big tobacco may be, on the doorstep now. On some level, it's kind of what took them so long. But you need to look at the companies that also are not just playing defense or playing offense, but which are the companies that are more associated with innovation. And I think that's really the most exciting part of where you folks might be investing in the next wave of this, because I think innovation is really going to be at the forefront of who's going to succeed or not once this land grab is over.
Yeah, the innovation point is the key, because we're not talking about, a lot of people compare this industry to different kinds of technology. Well, in technology there's new stuff all the time. People are just creating new things that we can't even think about. I mean, nobody knew that you'd be walking around with a supercomputer in your pocket 10 years ago, right? But we are. So cannabis is not exactly like that. Cannabis is, first it's a commodity that you grow, that you process, then you retail, then there's a whole ecosystem around that industry for a whole bunch of reasons. And only now are we starting to really get into the hardcore science that's going to be the future. And that's where I think there's a lot of opportunities, is to look at those things where you look at them and your gut instinct is, whoa, wait a minute, that's crazy. That's never going to happen. And then you say, well, is it? Maybe it's not so crazy. And those are the ones that you should really start thinking about, because everything that seems obvious today is not going to be the future.
So we actually do have time for one more question, but if I can jump in, I did want to make a comment about what to expect. So from a macroeconomic perspective, you can't expect a more competitive environment. You can't expect smaller companies that are not able to scale looking for scalability and therefore to partner or be acquired by others. But ultimately, I would agree with what everyone is saying. The future is not going to look like today, and that we can all be sure of. Yes, sir.
Yeah, I have a question on the private side. I know most of this is public, and I represent a company called Growth Science Nutrients. We sell liquid fertilizers to the cannabis industry, both conventional and organic. The question I have is a two-part. What are your thoughts about organic? I come from the organic food industry, so where do you think that's going? And valuations for small, privately held companies that are ancillary to the pick and shovel folks like we are, perspective on that.
I'll jump in first, but I'm sure everyone's got a view. So I actually sit an advisor for the Green Organic Dutchman, which is a Canadian company that's close to 2 billion Canadian that has staked their whole brand on this concept of organic. And whether they're the Whole Foods of cannabis, or at least if you think about the social, the cultural dynamic of at least the fiber, especially in California, of where cannabis has kind of come from. Seems to me this is supposed to be a massive part of it. It seems to me in the world we live in where organics, everyone is now concerned how many times the poor chickens were shot up with steroids that are in their eggs. I think that's critical. I think I'm surprised there's not more attention to it. In terms of the smaller ancillary businesses, they're in an interesting spot, and for people investing in them, again, that to me is all coming down to the management team because they're going to be uber competitive. Be careful what you wish for with the strategics. Most people would rather not see these guys come in overnight, but some of these smaller businesses could get wiped out if the strategics come in too fast because they are unbelievable competitors.
Yeah, on the organic side of the business, it's a side I'm also very bullish on. The Green Organic Dutchman is actually my largest investment, so I think that trend is just getting started and it's really in its infancy. I think it's tougher to find prospects to acquire that are focused on organic and to build that strategy, but I think they've done a great job looking at Europe. And private side, I've invested in several private companies and the valuations are much smaller and 25 million pre-money or less, typically depending on the play we've found. These have had great potential, but you really have to find something differentiated and that has a specific competitive advantage, in my opinion.
And I would just add on the organics, I think that, everybody's right. It's going to become more important as the consumer gets more educated. They're going to get more involved in where that product's coming from. And I also think that it's going to be forced upon the industry in order to pass some of the tests. If they've got to pass a pesticide test and things of that nature, cannabis is held to a much stricter level than, say, Burt's Bees, which has all kinds of pesticides in their bee products. And then with private companies, to me, I feel like the private companies are held to a different standard on the valuation. I think that the private companies are going, yeah, but that canopy growth guy, God, look at that valuation. How come we're similar and how come we're not getting that? And that's not an accurate comparison, but I think that that you're definitely seeing the private companies going, well, geez, when I go and talk to my potential investors, they're giving me this kind of valuation when all these public companies have that. That's not fair. But I feel like that's kind of how it's playing out right now.
So exciting times, plenty of opportunities, diversified opportunities, new competitive challenges. All of you investors and potential operators, I think the message that we can probably all agree on is do your homework. It is a changing environment, full of opportunities, but full of new challenges. And today's challenges may not be tomorrow's challenges. Alain, team, Deborah, Michael, thank you so much. It's been a pleasure moderating.